Welcome back to 7-Minute Options on Monday, August 23rd. Looking at the account today, it's been a bit of a roller coaster past few weeks. A big update today, which has helped, but prior to today, it was actually a really rough month here for me in August. But anyway, take a look at my account. I'm not opening any new positions at the moment. I only have about about $1,000 of options buying power here and about $2,000 of stock buying power. So it's very low. I like to keep these a little bit higher. I got several good positions here that I'm just waiting for them to hit their GTC targets. That being said, there's a couple of positions here that I can manage. I'm going to be managing most of these next week. So today, most of the expirations in the September cycle are 25 days away, which means next Monday they'll be 18 days away, and that will be a perfect time to manage them. So I'm looking to roll these next Monday, but there are a few that I can roll today. One is this RMO position. So RMO has just been an absolute thorn in my side. And we used to have the 15 put, then we rolled it down to the 11 put, and RMO right now is trading around $5 a share. So we're looking at some pretty steep losses here on RMO. It's a little bit disappointing here. Romeo Power, they are supposedly a big player in the whole energy infrastructure, like the electric charging grid for the transition to electric vehicles, blah, blah, blah. So on paper, in theory, they're supposed to have a good, bright future, which is probably why I sold the put on them anyway. So I don't really understand the reasons behind this massive meltdown in RMO stock. If I look at the chart, if I bring it up, this is RMO probably over the past year or so. I mean, they peaked at like 38 or 40, and they pulled back. They were bouncing around the $10 range for quite a while. This was here back when we opened up the $15 put. It was trading for $19 a share. And it's gone through several waves of a meltdown here. And there's just a recent meltdown here that's really puzzling. Right now it's down around 5. But anyway, the important thing to look at here is if I look at this column here, extrinsic value, there is $0 of extrinsic value in this position, right? It's an 11 put. It expires in 25 days. The stock is around $5. There isn't a soul alive that believes this thing is going to go up to $11 in the next 25 days. So this thing there's zero extrinsic value, right? So basically me holding this for the next 25 days is going to make me exactly $0 of profit. So there's really no reason to hold this. I can either close it and just take my losses, right? If you look at it, it's a $5 put, $11 put, it's trading for $5 today. The difference is $6, and that's what it is. I have to pay $6 to get rid of it. So that's an instant $600 loss by just closing it. So right now what I'm looking at here is rolling out and down. So if I look at the table for RMO, you can see here that the position we have, let's see, yeah. So if I roll this out to, let's say I buy this position back and I go out to, let's say, the October 15th, there isn't even an $11 put there. But let's say I go down to 7. I actually have to spend $380. Now, that sounds like a lot of money, and it is. But keep in mind that I would have to spend $600 to close this position today. So in other words, I am going down and recognizing $400 of less risk, and I'm paying $385 to recognize that $400 of less risk. So I'm paying $385. I'm kind of like making that 15. I mean, it's not a whole lot of extrinsic value in there. Let's look at extrinsic for a second. Yeah, so there's only there you go, $17 of extrinsic value in there. It keeps jumping around, but in reality, that's how much time premium I'm going to make between now and 53 days expiration, right? If I go down to the $6 strike, which is just at about the expected move, there's $32 of extrinsic value. And if I go down to the $5 where I am now, there's $64 of extrinsic value, right? And that's the difference that I'm not paying for. So I definitely don't want to go down to the 5. I mean, if I'm going to go down to the $5 put, I might as well just close this thing out, because again, what's the point of that range? But I can kind of keep hope alive a little bit, go down to the $7 put, and that's still $215 of credit. Sure, I have to buy back what I'm doing today, and that's even though it's $215, it's already $200 in the money, which is why it's only $50 extrinsic value. So this thing is just not very easy to work with, but if I'm going to be rolling down, I want to be as close to the strike as I reasonably can, because that's where I'm going to recognize the extrinsic value. That's where I'm going to get a reasonably high theta. So you can see the theta here gets closer and closer. I mean, the higher the theta is, the closer we are to the strike, right? So if I move closer to the strike, I recognize a higher theta, a higher daily loss of extrinsic value, which is what we're after. So I think I'm going to go to the 6. I scalped back 30 bucks here by not paying the full 5. Here I get 15 bucks back, 473.85. I feel like I want to pay the 385. It's hard for me to just pay the 470 and go down to the 6. Let's go down to the 7. Yeah, again, very little extrinsic value left, but hopefully maybe if RMO can finally turn around and move up a little bit, then we'll be in a good position on this put. You know, I always ask myself, just how much lower can it go? And that's a question you should never ask, because in reality, it can go all the way to zero. It can go $5 more all the way to zero. So I'm not asking that question. I'm just going to go to the 7 because it's better than paying $6 today to close out a position that has zero extrinsic value. I'm getting a little bit of extrinsic value back. In exchange, I'm going farther out in time. So again, I'm not happy about this, but I'll do it. And let's see where that leads me. Again, the $600 loss is already priced in. So you're going to see the daily P&L or the year-to-date P&L really drop because of this move, because the $6 is already priced in. All right, so I'm going to leave that open there. Hopefully roll that a little bit. That was the one big pain in the ass position that I wanted to manage today. You might see here there's -3 of extrinsic value here on PayPal. Again, this one is a debit call spread, and it's probably going to expire worthless. I can get $3 if I close it out today. It's like, let's just keep it open. Maybe over the next 25 days, something amazing happens to PayPal. Maybe it goes up to $290 or $300, and I can sell this for $20 or $30 or something. So no real pressure for me to close that one. Again, that's a debit call spread. So I'm going to keep that one open probably till expiration or close to it. If I can get some money back, like 10 or 20 or $30, I'll take it. But right now, I'm not going to sell for $3, especially when PayPal is on the move. It's up $4 today. Maybe you can keep going. Take a look at silver, 25 days away. Yep, so I'm rolling this one next Monday. No point rolling it just yet. I'm going to wait till one more week before I roll that one. And the rest of my positions look okay. I'm just waiting for the market and time to work their magic, and we'll be all right. Some of these are definitely long-term plays. I like where Joby is going, and I like where Astra is going. Finally, Astra is turning around a little bit today, so that's definitely helping me out. I got a covered strangle in Astra, covered strangle in Pinterest. That's doing okay. The 50 to 60, 50.60 call, covered strangle. It's hovering on 54, 55 today. That's fine. Actually, I'm looking forward to getting out of this position. It's tying up $3,400 of buying power. If I look at my delta, the delta weighting of my portfolio is quite high. And if you look at it, the reason why, if I sort by data, by delta weighted betas here, most of them are tied up in Palantir, Pins, and Fubo. And that's because all three of these positions are covered strangles. I actually have 100 shares, right? I got 100 shares of Palantir, I got 100 shares of Pinterest, I got 100 shares of Fubo. And most of these are, of course, tech stocks, so they have a high positive correlation. I mean, 4 beta, 1 beta, 2 beta, most of these are highly correlated with the market. They actually move more than what the SPY moves on average. So that's why most of these, this is where most of my positive betas come from. And so I know that I accept it. If I wouldn't have these positions, if I would just have iron condors or credit spreads, that kind of thing, then I would definitely be moving to reduce this and try to get it back down to zero. But because these 3 particular stocks are the majority of this 65, I mean, that's 40, that's like, yeah, 53, 54 of these delta weighted betas come from these 3 positions. I'm not too worried about it. Clover, again, I got 10 delta weighted betas out of this one, and yeah, it's a $10 put. It's trading for $8, so I can roll this out next week. I'm happy with that one. I got no major issues there, and the rest actually don't have that much. SoFi, interestingly enough, is still negative. It's negatively correlated with the market. I think that's just because it recently converted from a SPAC, and they don't have a lot of delta on SoFi yet. But if SoFi is in reality has a negative beta weighting. I mean, I'd be surprised because SoFi is a bit of a tech stock, but if that's true, that's fine. I can use that as a bit of a hedge to help get my portfolio back to a delta neutral position. So that actually makes me happy that I got so much capital tied up in SoFi. It's tying up $2,700 of buying power because I got a ton of positions in SoFi. There we go. Yeah, a lot of crazy positions piled on. So actually a good, maybe I'm more exposed to SoFi than I'd like to be, but I think SoFi actually has a good future. That's one of the stocks that I like. And again, don't listen to my recommendations here. I'm not a financial advisor, blah, 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 yada, yada, yada. Entertainment purposes only. But I think you know that if you watch this channel and other channels like it. So yeah, hopefully I can roll this RMO position out, get a little bit more extrinsic value back. This $3 is going to do nothing between now and expiration. So yeah, that's it in a nutshell. Just waiting for some orders to hit their GTC limits, looking to get some buying power back before I can actually make some more moves and open up some positions. I do not like to push my buying power down to zero. So yeah, I have $1,000 of buying power left, but I don't like to push it to zero because I do have some naked positions, like EWZ, for example, right? Just a regular strangle, and I just slipped under my $35 short put, and so this here, the cap requirement on these naked type positions is dynamic. So as EWZ goes lower and lower, the cap requirement that I need to hold it keeps increasing, which is why I never want to be in a position where I got negative buying power, because then I got to make all kinds of moves that I don't want to make. I make moves that I have to make to get my buying power back above zero. So I'm going to leave it where it is. In reality, it should be a little bit higher, but I'll take it as 1,000 and the $2,100 stock buying power. That's fine. I can even cover some short puts if they do get exercised. But anyway, I'm okay with where we are. I'm very happy with what the market is doing today after a crappy August, and RMO is already priced in. So, I made my mistakes in RMO. I took my licks. That comes with the territory. All right. Have a good day. Thanks, guys.